Hey everyone, my name is Karandeep Kumar, and in today's video I will be talking about President Trump's announcement in which he says that he wants to ban institutions from buying single family homes so that housing can be more affordable for Americans again. Now, the purpose of this video is not to say whether this is a good policy or bad policy or whether it will actually help making housing more affordable again. My purpose is to answer a very specific question, which is how will this affect Blackstone? Because as you may be aware, Blackstone's stock went down by like 5-6% along with Invitation Homes and American Homes for Rent. Now, before I get to Blackstone, let's talk about the announcement first. So, as you can see on the screen, the announcement says for a very long time, buying and owning a home was considered the pinnacle of the American dream. It was the reward for working hard and doing the right thing. But now, because of record high inflation caused by Joe Biden and the Democrats in Congress, that American dream is increasingly out of reach for far too many people, especially young Americans. It is for that reason and much more that I am immediately taking steps to ban large institutional investors from buying more single family homes. And I will be calling on Congress to codify it. People live in homes, not corporations. I will discuss this topic, including further housing and affordability proposals and more at my speech in Davos in 2 weeks. Now, as an investor, I think there are some important things that we need to consider. First of all, the announcement talks about single family housing. It doesn't mention anything about multifamily housing, student housing, or senior living. So we don't know what happens to that. And another thing is the announcement talks about buying homes. You know, does that mean that the institutions cannot buy more homes going forward, but they can keep the existing homes that they have? Or do they have to sell them? If they do have to sell them, how much time do they have to liquidate those assets? Do they have 1 year, 2 year, or there is no clarity about that. Also, if we are talking about banning institutions from buying single family homes, are we also gonna ban them from building them? Because these corporations, they have a lot of money. If you stop them from buying houses in the public market, they can just build them. They have the resources and capital to do that. So there is no clarity about that as of now. Now, let's get to Blackstone first. We have already talked about the announcement and what it says, and based on the information that we have at present, we are gonna take a look how it will affect Blackstone. Now, as you can see in this picture, Blackstone has more than $1.24 trillion in assets, and the real estate segment itself has $320 million in assets. It is also important to note that real estate is not the biggest portfolio of Blackstone. Its holdings in private equity and private credit are larger in size than real estate. And now let's take a look at the real estate portfolio itself in detail. As I'm sure you guys already know that not all of the portfolio is dependent on single family homes. Blackstone has a very diversified real estate portfolio. Now, we don't have the specific number for the whole portfolio, like how much percentage of the portfolio is in single family homes. We do have some information about the Blackstone REIT. It says that the REIT has around 9% of its holdings in single family homes. But for us to know the real impact of this announcement on Blackstone, we have to we have to calculate how much the single family homes account for the total assets. Now, Blackstone says that its exposure to single family homes is around 58,000 units. Now, we have to take the median sale price of a house in the United States, and according to Redfin, in November that price was $433,000. And if we multiply 58,000 houses with this number, we get the value around $25 billion. And if we take things into perspective, this is just 2% of the total asset under management for Blackstone and 7% of the real estate portfolio. Now, this is just my estimate. This number can be slightly above or slightly below from what we have calculated here. Now, let's say if Blackstone gets to keep the houses that it already has, it will simply allocate capital in the future to other segments, like they can buy more multifamily housing, or they can build more data centers. They will simply stop buying these houses, and I don't think it's going to be a very serious issue for the firm, because as you already know, its size is not as big as the market thinks. And the other thing, let's say in the worst case scenario, Blackstone has to sell its houses, and the market prices go down because there is going to be more supply from Blackstone and Invitation Homes and other companies in this space. And let's say Blackstone has to take 10 to 20% losses. How much do you think it's going to be? For a $25 billion portfolio, a 10% loss is going to be $2.5 billion, and a 20% loss is going to be around $5 billion. Now, so that we know exactly the amounts we are talking about, we have to put things into perspective. It's always important to put things into perspective, because these numbers look big. Yes, a $2.5 billion amount is not a small amount, it's a big number. But let's say Blackstone sells these houses in a 1-year period. So it's 4 quarters, and if it takes, let's say, $4 billion in losses, then it's around $1 billion in 1 quarter. If they are selling these houses every quarter, and it sells all of them in 1 year. And for Blackstone, $1 billion is not a huge number. Trust me, the company pays more than $1.2 billion in salaries and compensation in just 1 quarter. So $1 billion, yes, it's not a small number, but it's not going to be a huge deal for Blackstone, trust me. So I think the sell-off caused by this announcement was overblown. Blackstone's exposure is not as big as the market thinks it is. So as I have already mentioned in my article on Seeking Alpha, that for me Blackstone is a buy. It's a very good company, and it's also trading at a good valuation. It's not overvalued, and it's also not undervalued at present. So it's a good entry point. So I think this announcement doesn't affect Blackstone much at all, and my thesis stays the same. Blackstone is still a buy for me, and this announcement doesn't change anything. So that's it for today. Thank you for watching this video. I hope you found something valuable. Thank you.